Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena. And in the next half an hour, we will tell you the buzzers in trade, why they are buzzing on the back of the news flow or on the back of technical charts. But first up, let's take stock of how the market is shaping up at this point. Well, we have managed to give up gains from the 24,500 levels, but nonetheless, we have managed to recover from the day's lows as well. Right now, on the Nifty, we are managing to hold on to 24,460 levels. So we are trading with gains of 0.4% on the Nifty. Nifty Bank, however, is still trading in the red. It is still seeing consolidating. In fact, we are down 217 points from the day's high. We are down almost 0.2% on Nifty Bank. So Nifty Bank is still reeling under pressure. We also have the broader markets where mid-cap is outperforming the benchmark indices. In fact, it's outperforming the entire market right now. The entire mid-cap space is doing very well. That's trading up with gains of 1%. Small cap is also trading with gains of 0.6%. The broader indices are outperforming the benchmark indices as of now. If you look at the sectors also, we have a Nifty Auto that's doing very well. We had M&M come out with its results, strong set of results coming out for M&M. So that's trading up more than 2.5% right now. We also have TVS Motors, we have Motherson, that's all trading with gains of percent and thereabouts. We also have Nifty Energy and Nifty FMCG that's holding pretty well in today's trading session now with gains of almost over 1%. So Nifty Energy, FMCG also doing very well. Barring Nifty Bank that's in the red, the rest of the sectors are trading in the green. So banks are the only sector that are reeling under pressure, especially Kotak Mahindra Bank. That's down 5% after it posted its Q4 results, even though the brokerage notes seem to be rather bullish on Kotak Mahindra Bank, saying that they are better placed than their peers as far as the NIMs are concerned or the growth going ahead is concerned. SBI is another earnings candidate that's reeling under pressure with cuts of 1%. IndusInd Bank, Axis Bank, ICICI Bank, all of them are trading in the red as of now. So Nifty Bank is what is it's a sore part in the market right now. But a couple of other names to mention. We will get started with all the stocks that are buzzing in trade. So first up, let me pick out the first stock that is in focus today, and another banking name, and that is City Union Bank, that is in focus today on the back of its Q4 results. Now let's take a look at how well City Union Bank has performed. Well, it is trading up almost 5% in trade today after a strong set of results. So if you look at the interest income, that was up 11.5%. The NIIs were up 9.8% on a year-on-year basis. The PAT was also up 13%. PPOP trading with was trading up 25.3%. The GNPA has also moderated to 3% from an earlier 3.3% sequentially, and the NNPA has also moderated to 1.25% versus 1.42% on a sequential basis. And Nuvama is maintaining a buy on the counter with a target price of 220 rupees, which is a 27% upside from the current market price. Now they feel that the bank has reported the highest ever sequential deposit growth in its history and the biggest annual deposit growth in the last 22 quarters. Also, the improvement in the asset quality and adverse net slippages for the last 7 quarters due to the strong recoveries are expected to continue in FY26, and also they expect improvement in credit growth, better asset quality and stable returns ratio in FY26. And on the back of that, Nuvama is maintaining a buy call on City Union Bank. We also had the management in Kamakodi, Managing Director and CEO of City Union Bank. Let's go across and listen into what he had to say about the NIMs going forward.
We expect if this is like say slow and steady pace as we have seen in the past, like having about 50 to 75 basis point happening over the period of next 3 to 4 quarters in a slow and steady fashion, we should be in a position to maintain our net interest margin. And as we have said in our con call, 90% of last 50-60 quarters we were able to maintain in a range of 3.4 to 3.7, and whatever we have showed now comes in that gap. And we feel I mean the factor which determines that will be like how your rate of interest reduction cycle happens. At the current expected level, we hope we should be in a position to by and large maintain in this smaller range. We will continue with our conservative lending philosophy with more focus on the secured both MSME, commercial trading, gold loan and agriculture and all.
Moving on then, let's get on board our guests now. We are joined by Sameet Chavan on the technicals, and from our research team we are joined by Ravinder. Hi, good afternoon to both of you and thank you so much for joining us. Sameet, coming to you first, HPCL is the name that you've picked out for us. Now look at all the oil marketing companies, they're all doing pretty well in trade today for obvious reasons that Brent crude is below $60 per barrel mark, and on the back of that all the oil marketing companies are doing very well. HPCL has ticked up 6% in today's trading session, but even otherwise it has been an outperformer. So from here on, do you see the positive momentum to continue on HPCL?
Yes, certainly looks like, stock has been steady performer since last couple of months. We can see a series of higher highs, higher lows in all, time frame charts. Today, this stock has managed to surpass its recent hurdle with this, a bullish flag pattern breakout has been confirmed. So we expect this move to extend a bit, and if you see, this move is accompanied by, robust volume. So we expect 425, 440 levels to come in the next couple of weeks time. So overall, it's a buy and decline counter. Lower side now 380, 385 would act as a very strong support.
Right, a buy on this call coming in for HPCL there. But moving on to the next counter that is in focus, and that's Biocon. Ravinder, tell us what's the news flow here?
Well, as Biocon is in focus, where Biocon Biologics, a fully integrated global biosimilar to company and subsidiary of company, has announced that the company has secured multiple market access agreement for Yesintek, its biosimilar Stelara, and Yesintek is used for skin treatment. The market access agreement from numerous plants represent over 100 million plus lives in the United States. So back of this news, stock is up over 5%.
Right, trading with gains of 5% is Biocon, but another counter that is trading up 5% is KEI Industries. That's the name you've picked out for us. Amit, tell us, do you see this stock to do well? Because in the last 1 month, what a momentum that this stock has picked up. It's up 27% in the last 1 month. From here on, how do you see the stock moving up, and what is the upside? What are the levels to watch out for?
See, clearly, taking a glance at the weekly time frame chart, it appears that stock has already formed a good base around its, 200-day weekly moving average, somewhere around 2500, 2450, which is the recent lows. Since then, we have already seen a decent recovery in this counter. And the way, prices are behaving along with, volume activity, it seems that this move is likely to extend in coming days as well. Now, the next important level to watch out for would be around 3350, which coincides with the 89-day exponential moving average. But if the momentum persists and volume continues to be on the higher side, the stock would surpass this important hurdle of 3350, 3400 as well, and then probably in coming weeks we would see levels of 3600, 3650 in KEI Industries.
Alright, moving on then from KEI Industries to the other name that is in focus today, and that's IRCON. Well, the Northeastern Electric Power Corporation Limited has awarded work to IRCON International worth 458 crore rupees for Package 1 construction of civil work on item rate for a Teto 1 hydroelectric project in Arunachal Pradesh. The project is worth 458 crore rupees, and on the back of this big order win, IRCON International is in focus today, is trading up 3.3% in trade. But moving on to the next counter that is in focus, and that's Marico. Coming to you, Sameet. Marico is also candidate. Strong set of results that Marico has posted. In fact, brokerages have raised the target price for Marico. That is also doing very well in trade today. It's up 3.8%. Tell us from here on, where do you see this counter headed? Because it has done pretty well in this market. I mean, it has held its fort. It's up 14% in the last 6 months. So it has been outperforming. So what do you see for Marico on the charts?
See, clearly it has been one of the outperforming stocks within the FMCG space, and the stock is clearly outperforming some of its larger peers. Recent price action, from the levels of 580, a strong rally towards 720, which was followed by some consolidation, a time-wise consolidation within a range. And now this stock has again, given a decisive breakout in the upward direction. So that confirms a bullish flag pattern on daily time frame chart. Today's closing would be, quite important for this counter. 727, 728. These are the important levels to watch out for. In case if the stock manages to close, beyond this important hurdle, we could see this stock trading in uncharted territory, and then probably, next important projection would be around 760, 765 in case of Marico.
All right, moving on then to the next counter that is in focus, and that's Swiggy. That's trading with strong gains. In fact, it's trading up almost more than 8.5%. Ravinder, tell us what's the news flow here that's powering the stock.
Well, Swiggy has announced the remarkable scale of its quick food delivery service, Bolt by Swiggy, now operational in over 500 cities nationwide. Launched in October 2024, Bolt has surged across metro as well as tier 2 and tier 3 towns, powered by a network of over 45,000 restaurant brands. In less than 6 months of the being launched, Bolt already powers more than 1 in every 10 food deliveries order delivered by the Swiggy, with over 47 lakh dishes spanning 26 diverse cuisines. And Bolt is redefining the speed, scale and standard of food delivery in India. So back of this news is up 9.5%.
All right, Swiggy up in a way, almost 9% in trade today. But with that, it's time for a quick breather. Don't go anywhere. After the break, we're getting you some more buzzers on the other side. Stay tuned. Welcome back. You're tuned into Market Fatafat, where we're taking you through all the buzzers in trade. Let's resume with all the buzzers then. M&M is one counter that is in focus today on the back of its Q4 results that came in during the market hours. Now, that stock is perked up 3% in trade on the back of strong set of results that it has posted. Well, if you look at the scorecard and ET Now estimates, it has managed to beat on the revenue, EBITDA, profit and margin front, which has come in above what we were penciling in. Now, let's look at the revenue first. That has seen an uptick of 24.5%, which has come in at 31,353 crores on a year-on-year basis. The EBITDA is also up 42%. The margins have also ticked up. It have ticked up to 14.9% versus 13.1% on a year-on-year basis, and the profit is also up 21.85% on a year-on-year basis. Now, the company also says that for FY25 in SUVs, the revenue market share is at 22.5%, which is an uptick of 210 basis points. The LCV is more than 3.5T market share at 51.9%. That is also up 290 basis points. In tractors also, this highest ever full year market share, which came in at 43.3%, and that's up 170 basis points. And in electric three-wheelers, market share is at 42.9%, volume growth of 4.5x in the last 3 years. It was also all about a beat on M&M, like I said. But let's go across and listen into what Gurmeet Chadda, who's the managing director and fund manager at Complete Circle Consulate, had to say about the growth levers for the company.
I think looks like an all-round good show, as I was telling you, and if I remember, I think the margin was more like 13-odd%. So there's a good jump in margin. So I think now clear leadership is getting established, both in four-wheelers and two-wheelers. We've seen two is doing much better than Hero and Bajaj. Here we are seeing probably M&M, outpacing both Tata Motors and Maruti. And as I said, they picked the trend right, both in terms of premiumization, in terms of movement towards SUVs, and with tractor and farm equipment numbers doing well. I think it looks like a good all-round show. And I think with Anish coming in, I think what we've also seen is very good capital allocation. I think the cut down on loss-making JVs. There's one concern always which had was M&M's capital asset allocation. There was initially some bit of a disappointment when they bought some stake in RBLM, I remember. And then they clarified that was more a financial investment and not a strategic one. So that calmed the nerves. So I think it's good capital allocation, great focus, and I think great R&D. I think some of the new models which are coming in the EV space, in SUV space, have really surprised everyone.
All right, so that's the word coming in on M&M. But coming to you, Sameet, what do you see on the charts for M&M? Last 1 month has been a stellar outperformance by M&M, almost up 21% last 1 month. Good set of results coming in. So on the fundamentals also, M&M is looking pretty good. On the charts, how do you see M&M?
Yes, in fact, 3 weeks back, if you see, Nifty Auto, the entire auto basket was sulking a bit, and this stock was, one of the counters who initiated the up move. Stock has already built a strong base around 2,500, and from there we have already seen more than 20% up move in such a short span. So overall, the momentum is quite strong in the upward direction, and the stock is now likely to challenge its previous highs of 3,200, 3,250 quite soon. So it's a buy on dip counter. Any dip towards say 2,800, 2,850 would be a good buying opportunity with a short-term view. And on the higher side, as I said, soon we would see this stock heading towards 3,200, 3,250.
Right, 3,200 is the target for M&M. But coming to you, Ravinder, you've picked out Adani Ports, and the entire Adani pack is focused today. In fact, it is one of the top Nifty gainers. Tell us, what's the news flow here?
Well, as Adani Port is in focus, where company has announced its monthly business update, and the company Adani Port handled cargo volume of 37.5 million metric ton, which was up by 4% year-on-year basis, which was led by container. We saw a 21% growth year-on-year basis, and liquid and gas saw 8% year-on-year growth. And the April 25 logistic rail volume was at 57,751 TEUs, which was up by 17% year-on-year basis, and GPWIS volume was at 1.8 million metric ton. We saw a 4% uptick in year-on-year basis. So back of the strong monthly business update, stock is up 7.5%.
Alright, so the operational updates coming in for Adani Ports there. But coming to you, Sameet, tell us on the charts, what do you see for Adani Ports? This one is also again a clear outperformer. Last 1 month seeing an up move of 23%. From here on, where do you see the stock headed?
The entire Adani group seems to be on a roll today itself. We have already seen a humongous, volumes in this. Most of the counters, along with sizable, price activity. As far as Adani Port is concerned, this has one of the strongest chart structures within this, conglomerates. So overall, the stock has managed to surpass its 200-day simple moving average place around 1280, and this breakout is clearly backed by robust volumes, which provide some sort of credence to the move. Hence, we expect continuation of this price up move, wherein 1480. 1520, these are the next important levels to watch out for. Since the stock has already rallied quite a lot in last 3-4 days, a minor dip towards 1300 would be seen as a good buying opportunity considering the overall risk reward ratio.
Alright, so that's Adani Ports on the charts. But remember, all the Adani group of stocks, like Sameet mentioned, are buzzing away on heavy volumes, and that is also attributed to the fact that the representatives from the Adani group have met with the Trump administration as well to cancel out all the criminal charges against them on the back of that bribery case. And on the back of that, all the Adani group stocks are moving. Adani Green is another stock that is moving in trade. That's up 7.8% because Adani Green Energy 69, a subsidiary, has inked a pact to supply 400 megawatts of solar power to Uttar Pradesh Power Corporation from its project in Rajasthan. And the PPA was executed on Saturday according to the regulatory filing. On the back of that, Adani Green is also in focus today, trading up 7.8%. But with that, we are completely timed out in this edition of Market Fatafat. Ravinder and Sameet, thank you so much for joining us. With that, it's a wrap on this edition. I'll take your leave. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.